Hello, and welcome back to our limited series podcast, Fintech in 2025, Where the Industry Goes Next. This series, as you probably know, is sponsored by Marqeta, and in our first two episodes, we explored some of the mega trends that hit fintech in 2024, and we did a deep dive into the past, present, and future of credit cards. In today's episode, episode 3, we take things up a notch by digging into one of my all-time favorite fintech nerd topics, buy now, pay later. In this episode, which we recorded live from Money 2020, I chat with Rahul Shah, SVP of Product at Marqeta, and Ahmed Siddiqui, Chief Product Officer at Branch. We discuss the enduring appeal of BNPL, its strengths and weaknesses relative to credit cards, and the recent fusing of payment cards and BNPL to create more flexible and useful financial tools for consumers. Now, if you've read or listened to anything I've done on the subject of BNPL, you know that it's a topic that A, I am endlessly fascinated by, and B, that I am constantly wrong about. In my humble opinion, those types of topics make for the absolute best podcasts, especially when I'm joined by industry experts like Rahul and Ahmed. So, without further ado, here is episode 3 of our podcast series, Fintech in 2025.
Hello, and welcome to a live recording of the Fintech Takes podcast. Our listeners are jealous already that they weren't here because we're having so much fun in person here at Money 2020. I am delighted to be recording this series of podcasts with my friends at Marqeta, and this is episode 1 in a series of conversations we're going to do exploring different elements of the fintech and financial services industry that we are optimistic about going into 2025. I'm delighted for this episode to be all about one of my favorite topics, buy now, pay later. So as we get into it, I want to start by doing introductions. So if I could ask each of you to introduce yourselves and maybe say a little bit about why you are excited to talk about buy now, pay later.
So first of all, thank you for having us. Appreciate it. My name is Rahul Shah. I lead core product at Marqeta. I've been there 18 months, and I'm absolutely excited to be part of this podcast and part of the journey that we're going to take with BNPL. There's a lot we can achieve. The Marqeta Flex announcement that we had this morning is one big step towards that. So I'm glad to be here.
Thank you for teasing that too, because we're going to get there. All right, please.
Hey, thanks for having me. My name is Ahmed Siddiqui, and I lead product and payments over at Branch. We're a workforce payments platform, and we're a partner of Marqeta. I'd like to say our favorite partner of Marqeta. But yeah. And I am stoked about BNPL because, again, the vast majority of the people that we service are working Americans, and there just is a lot of need for cash flow solutions. And I think buy now, pay later has a really, really strong fit in what we're trying to accomplish. So again, thank you so much, Alex, for having us.
Yeah, no, fantastic. So that was actually a great lead-in to the first question I wanted to ask you guys, which is, I'll be perfectly candid. I think I've predicted the death of buy now, pay later several times now in the newsletter and the podcast. So my bad. I got that wrong. The reason for that, though, was that there have been these moments of sort of mania over the last couple of years where I sort of questioned the enduring appeal of buy now, pay later. Like, is it a ZIRP-era phenomenon? Does it only make sense in a low interest rate environment? Does it only make sense when VC dollars are funding these businesses but aren't necessarily profitable? Do consumers really like this? Is this something that will work across multiple generations? Like, BNPL has confused me for years. One question, though, that I think has been answered is BNPL does have an enduring appeal, right? It's been popular in a low interest rate environment. It's been popular in a high interest rate environment. It's obviously very popular with younger consumers. I think if you talk to someone who's 19, they won't even really understand a world in which you couldn't BNPL any possible. And I'm trying to explain how to write a check to them, and they're like, "What are you talking about?" So there's a definite shift from a consumer perspective, but it's not just young consumers, right? It's everybody. It's not just buying stuff on Sephora or Nike. It cuts across a lot of different categories of products. So my first question is, maybe we can just go down the line. What contributes to BNPL's enduring appeal and effectiveness?
So I do think BNPL is here to stay.
So you're saying I got it wrong?
You might have gotten it wrong. You might have gotten it wrong.
Fine.
But I do think it's here to stay, and I think the main reason why is because it satisfies and it meets a consumer need and a want. There are literally tens of millions of Americans that don't have access to revolving credit, and for those folks who only have a few $100s in their bank account, being able to complete a purchase with a buy now, pay later option works very well for them. So for those folks, there's a need. And as you mentioned earlier, there's also a want. There's an equally large segment in the US that looks upon credit in different ways than people of our age, of our generation did. And so a lot of those folks have seen their parents and older generations get crushed under loads of debt.
Yep.
And so when you put both of those populations together in terms of a large segment of Americans who don't have access to credit, along with a segment that's actually growing up wanting to be a little more conscious of debt, you get to make a pretty large population that actually wants BNPL. So given that context, along with the fact that technology is now much more of an enabling factor,
Yeah.
I do fundamentally believe that BNPL has a very, very concrete place in the financial ecosystem that we have.
Yeah, no, I think that's a very fair point. And just to piggyback on one thing you said, the technology piece is critical, right? Because one of the questions I always ask with this stuff is, would this have existed 50 years ago if we could have done it from a technology perspective? And really, like, especially paying for BNPL, what we're doing is we're just underwriting smaller transactions, right? And before, from a technology perspective, from a people perspective, it was just too expensive to underwrite transactions below a certain amount. But once we unlocked that from a technology perspective, suddenly anything could be financed. And so I think that you make a really good point that technology has unlocked something that we probably would have been doing for a long time if we could have. What would you add?
Yeah, I'd say this, that with buy now, pay later, they've just made the repayment of things so easy, right? And so there's an element of transparency that's missing with traditional credit that I think a lot of people really enjoy, where it's like, you know that you're going to be paying for installments. You know what the fee is, if there is a fee. You know when it's going to get paid out. And by the way, they're just going to pull it from you. You don't have to worry about sending some money in. And I think just that motion by itself, like, probably was not available from a technology standpoint, but it's just made BNPL so much easier to digest and understand for a lot of people.
Yeah, I mean, I think that's a really good point, because it is just this sort of like intuitive product that makes sense, right? And again, I always go back to that 19-year-old, but it's like, you know, I'm sure we can all remember, whenever you interact with a new financial product, there's sort of a question of like, am I stupid or am I getting this wrong? Like a lot of products are not naturally intuitive. BNPL, and, you know, you could frame this as a con to a degree in terms of like maybe people overusing it, but it's intuitive. Like, it makes sense. It's built in. It kind of blends payments and lending together. And it leads to my next question, which is, how do you guys think about it in terms of how it stacks up both pros and cons against credit cards, which I think is, whenever you talk to a firm or you talk to Klarna or you talk to these big BNPL providers, they frame their market opportunity around, look how much credit card debt is out there, look how much transaction activity happens on credit cards. We can eat into a lot of that and still grow. So how do you think about that?
So both, credit has been around for decades. The very fact that it's as big as it is and it's as established as it is a huge strength for the credit card providers. The fact that credit is so readily available, so readily understood, so the consumer experience, the consumer reporting, the consumer protections that are afforded as well, make it very, very, make it an established product. And that's one of its greatest strengths. It's been around, it works, people know how it works. BNPL is one of those upstarts. And so the ability for BNPL to actually find its place, I do think that in some ways, they're going to compete, because the person that could have otherwise used credit might want to use the BNPL option instead. But in other ways, as I mentioned earlier, there's a large segment of the population that needs that instrument that never had credit. So
right,
I think
they don't have credit cards.
You're right. So I think it's going to be both a good thing. They'll compete a bit, but in that competition, I firmly believe it's going to make the financial ecosystem more efficient. And that's where the introduction of BNPL over the last handful of years and the continued innovation that will take place on top of it, I think will allow every participant, both debit, credit, BNPL players, to up their game.
Yeah, no, I completely agree. I mean, one thing I would add to that is the CFPB released a report that they have to do legally every 2 years on the state of the credit card market, right? And the most recent report, one of the most fascinating findings in there to me was that consumers are actually using that BNPL feature that a lot of large card issuers have built into their cards. I kind of thought, again, this is like Alex admits how stupid he is on a podcast. I thought that was not going to work either. So again, I take another L. And the reason I thought that was it just seemed like kind of a weird built-in functionality. Oh, you know, you had a large transaction on your credit card. Do you want to finance that transaction for a fee? I just didn't really see a lot of consumers signing up for that. I was wrong. The CFPB's report clearly says that that is actually a very popular feature that Chase and American Express and US Bank and others offer. And what I realized after looking at that data was exactly what you just said. Adding BNPL to a card makes it an easier product to use in a logical way, right? So I sort of framed this as like we've been in this era of like financial product misuse where it's like there's a smart way to use a credit card and a dumb way to use a credit card. And, you know, in certain cases, like it doesn't make sense to revolve a balance, but there are large transactions where you need a little bit of extra liquidity. So that ability to build in BNPL as a feature into cards actually turns out to be very, very powerful and something that even though it does eat into, I think, credit card issuers' profits, they view as a benefit because consumers really like it and they're using their product in a more logical fashion. Ahmed, what would you add to this question of like credit cards versus BNPL?
Yeah, I mean, I use both. So, I mean, even though I could say that, you know, I could go only BNPL or I could go only credit, but I do use both. And just like you said, we've got a family of 5.
Yeah.
And so airfare anywhere is super expensive.
Yeah.
That's what I use BNPL for on the card.
Yeah.
Right?
Yeah. Same thing.
I think there's a ton of room for all of this. And I think it's all just becoming better and better over time.
Yeah, no, I agree with that. I mean, it's just more optionality for consumers, right? And again, people get a little hysterical at times, and I probably was one of them, around BNPL. Is it leading people into more debt? I think that's kind of the wrong question to ask because really, you know, people are going to use products in different ways. The question is, structurally, what is this product good at? And I do think BNPL fits this niche that we've been talking about. The other thing I wanted to ask about, and this is a slightly broader question, is we are seeing this shift in the market, speaking of credit cards, from cards being treated as a payment or a lending mechanism to cards playing more of a role as like a routing or workflow tool, right? And so the idea is I have this card, there's a whole bunch of existing infrastructure that I can use to interact with my card. There's lots of protections built into it, to your point, but I might not actually want my credit card to be the funding vehicle that's used for this specific purchase. So we've seen a lot of announcements and a lot of movements in the market over the last 6 months to a year of trying to treat the card construct more as a way to route different payment options or different choices for consumers and giving them more flexibility. I know this is an area you spend a great deal of time thinking about, so maybe you can go first, but like, what's been your observation around that shift?
Yeah, and that's an area that Marqeta is going to play a very key role in going forward. You referred to the Flex Credential capability that Visa came out with earlier. Marqeta was one of the first participants to be able to partner with them and roll that feature out. In disaggregating the actual physical card from the physical or from the instrument that's behind it, I think it allows for much, much greater flexibility, ultimately for a consumer experience. And the example I would use sounds crazy, but you know, in the old days when you used to buy records or CDs.
I don't know what you're talking about. I'm too young to know what you're talking about.
I know.
He lumped me in as being old with him before, and I don't accept the premise of that.
That's true.
What about the cassettes?
Yeah, back in the day, you guys would buy a record, and you have the 10 songs that come with that, right? What Spotify did was to disaggregate that, right? You can go pick a song, and it's better for consumers, better for artists alike throughout the supply chain. We're trying to do the same thing with financial instruments.
Right.
And if we're able to disaggregate that with the help of networks, we're able to provide consumers a lot more flexibility so that they could use one card to satisfy the experience at point of sale, but they can then decide either during, before, or after which funding instrument to use. That will greatly transform the consumer experience, and I think most importantly, it will allow them greater flexibility. And if there's one or two themes that we would want to focus on from Marqeta's perspective, it's distribution and ubiquity. Let's make these kind of flexible options let's make it available for consumers across wherever they are, and then let's give them the optionality to choose whichever instrument they want. So I do think it's going to allow for much more innovation and flexibility on the company side, but on the consumer side, it just empowers them to do what they want more effectively.
Yeah. Yep. Ahmed, I mean, I know you've done a lot of thinking on this as it relates to your job, but can you kind of give us your perspective and how you view it potentially empowering customers?
Yeah, I think it's a user experience thing. People are used to just using their card to pay for things, and now if you have the power of using different financial, instruments in the background to pay for their things, but just still use that function of swiping the card or tapping the card or whatever you want to say, like people just know how to do that. And then from the merchant standpoint, they understand how to accept it this way as well. And so we're basically giving a really, really great user experience that people really understand and applying a new use case to it. And I think that's what's really cool about it, is like we're not having to educate people, hey, when you want to use this QR code, or when you want to use this, you want to use something else, so
that's a really good point. I mean, the hardest thing is changing consumers' behavior, right? And I think even in the context of BNPL, we've seen certain versions of it that have worked better than others, right? I mean, it's doing it in store is kind of clunky sometimes, right? I think there was a example of a firm partnering maybe with Walmart, and they were like, yeah, we're going to do it at point of sale. And I read like the description of how the experience worked. And I was like, I don't think people are really going to do that. But in an e-commerce context, if you're just clicking a button and it's just like, checking out on a website, it's easy. To your point, the card is kind of a Trojan horse because we all know how to use cards, right? It's very intuitive. It's built in. And so that makes a lot of sense to me. On the funding mechanism side, why is BNPL sort of rising to the top as the first use case or option for this flexible credential? Because it seems like as soon as we sort of announced this functionality or this idea, BNPL was like the obvious first use case. Why is that?
I think the stretch from a person using a debit card to a person using a debit card and wanting a BNPL experience is a lot easier in my mind than making the stretch from debit to credit. There's a lot more infrastructure that needs to get laid in place. And the consumer experience is a lot more complex. So if you imagine a consumer that has a certain amount of money in their debit account and they don't have enough to complete that purchase, to extend that thinking to a BNPL experience is a lot more intuitive in my mind, which is why I think it's an easier thing to be able to adapt. As you mentioned, consumer behavior is what trumps. Ultimately, are people going to use it or not? Mm-hmm. That stretch, especially given what we talked about earlier in terms of the consumer need and want, I think it's a lot easier for consumers to actually relate to and for us to be able to deliver with what we did with VFC.
Yeah. I'd love your perspective on this.
Yeah, I mean, let me just put it into a very simple story.
Sure.
So we have, let's say, an Uber driver, right?
Yeah.
Uber driver is earning their money, they're getting their money on a debit card, and they have a flat tire. And when they get this flat tire, they see that maybe they have $200 in their account, but it's a $700 tire. And of course, when one goes bad, the place always tells you to replace all four, right?
Right.
So now, how do you pay for that? It's an embarrassing experience to walk in, say, hey, please go ahead and change my tire, and then not be able to pay for it. And instead of now having to apply for all new financial instruments or whatever, in the moment you can go ahead and swipe that same card that you're accustomed to using and be able to initiate a BNPL transaction on it.
Yeah. No, I think that's exactly right. I promised I would give a little bit of time for you to talk specifically about the announcement, because I do think it is really timely and an interesting example of some of these evolutions we've been discussing. Can you give a little bit more detail on Flex?
Yeah, absolutely. I'm happy to. So today we announced our new product called Marqeta Flex in the market, and it will be available sometime next year. We're working through all the product build, all the details. But in a nutshell, what it allows us to do is to help consumers have BNPL options so that they can walk away with the purchase when they want to. If you take a look at the problem statement right now, BNPL, we've talked about it. It's here to stay. There are all the reasons why it's continuing to grow. but the supply chain is still pretty inefficient.
Sure.
And so there's quite often times when consumers could benefit from a BNPL option, but they don't have it. There are times when a consumer goes to a merchant site and only has one option.
Yeah.
And so there's lots of different things that we, as Marqeta, stood back and said, how can we address the BNPL growth in a way which makes it more efficient? And in being able to allow consumers, via issuers, via wallets, via merchants, to get access to multiple BNPL options, we're meeting the consumer where they are.
Yeah.
And that allows the consumer to walk away with what they need to walk away with, the merchant to actually complete that sale, or the issuer. And ultimately, for the BNPLs, we provide more distribution and access to consumers. Given where BNPL is at in its maturity, this actually greatly increases distribution and ubiquity, which allows us to actually make the whole process more efficient.
Yeah.
So that's what Marqeta Flex is about. The experience that Ahmed just talked about is what we're going to go live with, so that if a consumer in Ahmed's or Branch's app has a need and cannot afford it, they have the option to get multiple BNPL offers, and they can choose which offer makes sense for them. They never had that option. And so not just for Branch, for many other customers that we work with, we're going to enable that early next year.
That's awesome. Can you elaborate a little bit just from the Branch perspective in terms of what you think this is going to do for customers and like the impact it's going to have?
Yeah, I mean, I think it's going to be huge for our users because, again, we offer other ways for them to access their money as well. So we pioneered sort of the earned wage access side of things. And so, again, as people are working, you're able to get your money. So that smooths out cash flow. But again, for these sort of like larger purchases, like the tire or some medical expense or whatever, they need other ways of accessing that. And a lot of our users don't have access to really good credit cards either. And so what this will do is it opens it up in a way that's like really slick and easy for them to understand, and it can be done right at the point of sale. So it's like, okay, maybe you get declined, and then you can quickly make a decision and then try it again and it'll work.
No, I mean, when you describe that just embarrassment factor, right? And like, this is why people enable overdraft, even though it's not a very well-designed product, right? Yeah. It's to avoid that embarrassment. And so giving not just one option to one BNPL provider, but a suite of different offers where you can pick the right one and surfacing that in real time, it's pretty cool. It's pretty cool. I mean, we've never had that before. I sort of in my head analogize it to like indirect auto lending, but taken to a much smaller scale in real time at the point of sale, which is pretty impressive. All right. We're going to end with just one prediction, and it can be anything you want. But as we think in 2025, and I'm going to try to have one that ages well instead of badly, what's one prediction you have about BNPL? I'll go first to give you guys a little time to think. My prediction is that in 2025, the BNPL providers still will not furnish data to the credit bureaus. That's my prediction. Despite massive amounts of pressure to the contrary, I think there's lots of reasons why they will still be resistant to that idea. However, I do also think they are going to have to share data via open banking. So that might be a different way to get access to that data. Would you like to go next? Passing the buck.
Well, I mean, I think the BNPL providers are going to come up with more creative offerings.
Oh, interesting.
Meaning that, like,
he took your one. You let him go first.
I knew your script. I'm just going to take it. Yeah, I mean, I think it's just going to be more creative in terms of like things that are, again, they should be able to find out more about the end user and be able to give them, the solution that's right for them.
Yeah.
I mean, I don't want to use the word AI, but like everybody is, so I'm going to.
Yeah.
But like, if you know more about these users, you can actually apply and offer something that's just genuinely better for them.
Yep. I like that one. Rahul, now you have to go.
I knew
you were going to say AI too. So.
I thought your question was going to be broader, just 2025 prediction, in which case I was going to say go Celtics.
Yes, well, that's a way to get to my heart, so I appreciate that. That's very good.
I think BNPL 2.0 is going to take place next year. And what I mean by that is the first 5 to 7 years of BNPL maturity in the US at least has been about replicating the BNPL experience as it stands, just across additional BNPL players and just getting it out there.
Yeah.
Next year, I think it's going to separate into two different forms of innovation. One is distribution innovation, which is where things like Marqeta Flex come into play. The other is product innovation. And as there are more and more entrants into the BNPL space, once distribution is taken care of, the issue is going to be more about what does that next form of BNPL innovation look like? Paying more than for.
Yeah.
What does that next innovation look like? BNPL players have been struggling with getting distribution. If we can help solve for that, it allows them to focus more on what is the next evolution of the BNPL product itself.
Yeah.
And so I do see that coming out. In what ways, shapes, and forms, I don't know yet, but I do actually believe that AI will have a very concrete effect on the consumer experience with BNPL and with other funding mechanisms as well.
Yeah, I mean, it just makes that routing layer smarter, right? Right. No, so I completely agree with that. We'll wrap it up there. Thank you so much, guys, for your time. This was awesome.
Thank you, guys.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.